Scalping is the act of taking many trades to harvest small profits repeatedly. Now, these trades are executed on intraday timeframes such as the 1, the 5, and the 15-minute charts. Without question, scalping is one of the most popular trading strategies in action today. Do you want to scalp? It's good to hear. If so, you will need some technical indicators to help you. Now, in this video, we'll show you the 7 best indicators for scalping. All right, let's get to it. A scalper must make thousands of decisions on compressed timeframes. In reality, scalping isn't all that different from Formula One racing. The fastest players win. That's where indicators come in. They help traders make unbiased decisions quickly. A good scalping indicator is like a 1500 horsepower Bugatti. It can get you from point A to point B in a flash. Now here are the 7 best indicators for scalping. Number 1, the RSI. The Relative Strength Index, or RSI, is easy and it's great for scalping. As you can see, we've got a 5-minute time frame here on WTI crude oil. When the RSI goes beneath 30, that means that we're in oversold territory and it's time to buy the market. And when it goes above 70, that means we're in overbought territory and it's time to sell the market. Nice example right here. Price goes beneath 30, it's time to bid crude. And as you can see, you get in on a nice little rally. Great for scalping in short time frames, the Relative Strength Index. Number 2, the exponential moving average. The exponential moving average of the EMA is a great scalping indicator because it is fast. Why is it fast? Because we weight the most recent pricing data in the EMA calculation. Now you're free to use the 8, the 9, the 13, or the 21. Those are the most popular, or you can use any type of periodicity you'd like on your EMA. Many ways to trade it. The most common way is when price breaks under the EMA to sell the market, when price breaks over the EMA to buy the market, but a lot of trading options here. The EMA, a fantastic scalping indicator. Number 3, the moving average convergence divergence, or MACD. The MACD is a great scalping indicator because it gives us a good look at where pressure in the market may be building or where it may be subsiding. Why? Because it's a momentum oscillator. As you can see, the MACD is plotted in its own separate window. The tan line is going to be your signal line. The blue line is actually going to be your MACD. Very simple to trade. When the MACD crosses under the signal line, we're looking to sell the market. When the MACD crosses over the signal line, we're looking to buy the market. Why? Because we want to capitalize on short-term momentum right here. Short time frames, the MACD can get you in and out of trades, many trades a day, and they will be with the momentum. So the MACD, pretty much a rock solid scalping indicator. Number 4, Bollinger Bands. Bollinger Bands are one of my personal favorite scalping tools. They're fantastic because they give us price within an envelope. That means price actions in context. We can measure the relative elasticity or market state at just a glance. As you can see, we have an upper Bollinger Band, a lower Bollinger Band, and a midpoint. A couple different ways to trade Bollinger Bands. You can be as simple as buying when we go above the midpoint and selling when we go below the midpoint, or you could look to sell that upper Bollinger Band or buy the lower Bollinger Band in a rotational market. Lots of options for Bollinger Bands. Really one of my favorite scalping indicators. Number 5, the VWAP. The VWAP, or volume weighted average price, is like a moving average, except we're using volume information to get a greater sense of market condition. Now, the VWAP typically is viewed as being much smoother than a moving average, but it's traded in much the same way. You can use it as a trend indicator, meaning you sell when price breaks beneath the VWAP, you buy when price breaks above the VWAP. You can also use it as a support and resistance level to buy on retracements off a bullish trend or to sell on retracements off a bearish trend. So the VWAP is like a moving average, but gives us volume information in there. A broad view of market state can be great on short time frames. Number 6, the Parabolic SAR. The Parabolic SAR, or stop and reverse system, is just that. What we have here is a series of dots plotted above and below price action. When the dots are above price action, that means the bears are in control, and when the dots are below price action, that means the bulls are in control. What we're concerned about is when those dots flip, and that's our signal either to close out an existing position or get into a new position. In this instance, we would be potentially looking to get short right here. You can see the bulls are in control, the dots flip. That's a signal to sell, and we're going to go ahead and ride that trend down until the dots flip again, where we would close and potentially open a long position. The Parabolic SAR can be great for getting you in on trends, and it will put you in a lot of trades. As you can see here on the 5-minute chart, the biggest thing to remember is when the market flattens out, this indicator can really become a challenge to trade because you're going to get very choppy and be flipping from bull to bear or bear to bull all the time. Still, though, pretty good indicator for trading short time frames if it's used with the proper risk versus reward management style. Number 7, the shaft trend cycle. The shaft trend cycle, the STC, is a combination of the RSI and the MACD. It's a momentum oscillator, so we have an envelope that tells us whether price is in overbought territory or oversold. When we're above 75, we're in overbought territory. When we're beneath 25, we're in oversold territory. We want to sell when we're overbought. We want to buy when we're oversold. It's like the MACD because a lot of traders look for crossovers of the midpoint of our envelope there. So let's say we're coming out of this bearish price action. We're looking for a bullish reversal. We wait until maybe we cross that midpoint to buy, and then we get in on the big trend up. So it's a momentum oscillator, the STC of the shaft trend cycle, a more complex way to scalp, but it can be done with a little bit of effort and study on your part. Well, there you have it. The 7 best indicators for scalping. Which one was your favorite? Leave your answer below. Now, unfortunately, indicators alone aren't enough for you to win as a scalper. You're also going to need these 3 things: tight spreads, strong internet connectivity, and robust computing power. Secure those assets and you're ready to roll. Now, scalping is a great way to trade the financial markets. I've been scalping for more than a decade. Speed and precision is what it takes to win. Try out a few of these indicators. Take them for a spin. Let us know how it goes. Hit the subscribe button and leave any questions that you may have below. We'll get back to you in short order. All right, that's it for now. We'll catch you on the next one.